Let's now take a look at the auction clearance rates around the country from over the weekend. The national clearance rate, 54.5% from 1,116 auctions. You can see it's pretty good. It actually picked up a little in Sydney, 427 auctions, a clearance rate there back above 50%, 50.6%. Plus there were an extra 1,265 properties sold in New South Wales privately in Melbourne, 356 auctions. Clearance rate here again stronger, 64%, plus an extra 957 private sales. Brisbane had 56 auctions, a clearance rate low like normal, 41%, plus 989 private sales. Adelaide, 40 auctions, a clearance rate here as strong as it has been, 75%, plus 283 private sales. Finally, in Canberra, 40 auctions, a clearance rate 67.5%, plus 81 homes were privately sold. Now, Paul Ryan is an economist specialising in housing finance and market forecasting at REA Group and spent a decade with the Reserve Bank, and he joins me now. Paul, many thanks for your time. I want to go to this whole point about the Australian housing market right now. The stock market's roaring. People are expecting maybe with inflation maybe coming off a little that maybe central banks start to just taper off some of these interest rate rises. That has a big bearing on the outlook for the housing market, doesn't it?
Absolutely. So we're seeing this position in the housing market at the moment where we're seeing really strong listings activity, lots of sellers bringing properties to market. There's still lots of buyers in the market. We've still got something like 50% more potential buyers looking at properties on realestate.com.au than we had prior to the pandemic. But we're seeing prices falling, and there's a lot of uncertainty about how high borrowing costs will go and how much borrowing capacity will reduce, and so how much activity and how active buyers are.
Okay, so I'm going to go to one thing here. The reason why inflation is falling is because there's an expectation of a slowdown in global economies. If there's any pickup because the central banks stop raising interest rates, inflation could take off again. So, there's a really fine balancing act and a judgment that the markets also have to determine.
Absolutely. Central banking is difficult. The RBA is trying to figure out where inflation is going to be in a year's time, and borrowers are trying to figure out what the RBA is thinking. So I think there's a lot of borrowers out there who definitely aren't borrowing up to their capacity or bidding as aggressively as they were 6 or 9 months ago, just on that uncertainty, just about rates.
Okay, so then there's another aspect, is it that your home is for 25 years or 30 years, however long you're borrowing for. Now, a lot of people do turn over homes on average around every 7 years or so. But it's not something where you're necessarily having to think about the next year or the following year, is it really? That's the whole point.
Yeah, generally. I mean, people don't want to have to become economists to buy a house, right? What they want to do is they want to have some certainty about what borrowing costs are going to be. And part of that, a lot of the discussion in the media about interest rates, I think, is kind of leaving borrowers a bit uncertain about what they're going to do.
Yeah, because unlike the United States where you take out a 30-year mortgage, here in Australia, you've got to have some literacy. You've got to have some view about whether interest rates are going higher, whether you can afford that, whether the home price is going lower. It seems to be more of a sport because of the way in which our mortgage market is set up.
Yeah, absolutely. The interest rate is kind of the first order consideration for housing prices rather than kind of demand and supply, which you'd normally expect for markets because it's such a long-lived asset for households.
Okay, so then you get to the point whereby, again, we look at auction clearance rates over the weekend, and it seems as though all of a sudden a few more homes are clearing. So either that means that the vendors, the sellers, are actually becoming a bit more realistic, or the buyers have still got a bit of an appetite out there because there's more selection out there.
Yep, I think it's a little of both. I think we're seeing that sellers, after kind of 2 or 3 months now of interest rates increasing, they're starting to realise actually prices that were attainable earlier in the year aren't attainable anymore and kind of coming to market to where borrowers are at. Because for borrowers, borrowing capacity is down kind of almost 20% if you include the buffer rate changes by APRA last October. Yeah. So there's a big difference there. Now, we're still seeing borrowers in a really good position to buy. Unemployment is at kind of the lowest level we've seen in 40 or 50 years. And we're expecting wages growth to continue to pick up. So that's the fundamental reason why interest rates are going up. The economy's performing really well.
Great to have you on. We'll talk to you again very shortly.
Thanks for having me.